Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Michael Weisz. He's the founder and president of Yieldstreet, and we're going to discuss adding alternatives into an investor portfolio. Michael, it's great to have you with us. Welcome to Trade Talks.
Jill, thank you for having me, and I'm excited to be here.
And we're excited to have you. And let's talk about the shift from 60-40 thinking and the future of retail investing and the need to diversify with alternatives.
Absolutely. So I think that, listen, investors today are facing a really difficult landscape in the stock market, and they're looking for easier ways to access wealth creation. They're also looking for more stable ways to invest. And I think that when you look at pension funds and endowments and other institutional investors, they've moved up to 50% of their asset allocation into private markets, but still retail investors don't have the right level of access to it. And so at Yieldstreet, we have more than 400,000 members on our platform. We've already returned to them over $1.6 billion of principal and interest, and we've invested over $3.5 billion on their behalf, trying to deliver just on that promise to bring better quality investments and private market investments to them.
So, Michael, how does Yieldstreet provide retail investor access and tools that work in their favor?
So it's a loaded question. I think the simple part, providing access, is here at Yieldstreet, we focus on building relationships with top quartile and top decile originators and asset managers across a host of areas. So for example, if you want exposure to the real estate market, fine art, consumer lending, commercial lending, private equity, private credit, we have a bunch of those investments available here at Yieldstreet. And so we created this incredible user experience. It's transparent, it's digitally native, it's right at your fingertips. And we can help you access those investments and make those decisions that are right for you. On the other side, it's really about providing education. It's helping people learn more about private markets, helping them feel more comfortable, more empowered to make those decisions so that they can feel like they have the tools to make the right investment decisions for them. And so that's how we focus on bringing that to the retail investor.
How can Yieldstreet and the fintech industry overall more broadly help those who need access to financial instruments, giving them an opportunity to reach financial independence?
So it's a great question. I think as an industry as a whole, we need to come together and provide more education. We need to come together and help people understand what is private market investing. For the last 100 years, all we've been exposed to is headlines that are largely around stock markets and public markets, maybe a little bit more on crypto more recently, but private markets largely has been this small sort of club between ultra wealthy and institutional investors. So we need to come together and provide consumable level of information, enjoyable ways to take in that content to learn more about investing. That's number one. Number two, we need to be investor first. We need to think about what are people's goals? How do we help them achieve financial independence? And to do that, we have to give them access to the right investment product and in a format that's right for them. Meaning, can you bring down the minimum investment to a level that the mass consumer can start to partake in private market investing? Can we think about building structures that help people come into them more easily? And so I think as an industry as a whole, we have to focus on access to great product, accessibility of that product, as well as education to help people really understand what they're investing in and help them make those right decisions.
Let's go back to your statement before that you typically associate this with ultra high net worth. To get access to private markets, because there are liquidity issues in terms of being able to access the investments, in terms of just how liquid they are with cash and the income that they're bringing in. Can this be appropriate for unaccredited investors, assuming that the education has been provided?
So yes, certainly it can be. For the right product, for the right non-accredited investor, it absolutely can. There are ways that non-accredited investors can be invested in a fund that's highly diversified across different asset classes or even within a specific asset class. There are vehicles in which people can access some level of liquidity. I think that the price that people pay for liquidity, meaning the ability to sell a stock, for example, immediately, is largely connected to the volatility that exists. And so there are opportunities for non-accredited investors that I think overall are going to perform much better for them than the stock market will. And I also think that it'll enhance their lifestyle. Nobody likes looking at their portfolio and every day feeling like they're on a seesaw. And I think the US retail investor is feeling that, emotionally and physically today in a way that they don't enjoy that experience. And so it's about better returns and a better quality of life.
So, Michael, at the end of the day, this sounds like this type of technology and access certainly is disruptive and inherently promotes financial inclusion and increasing financial literacy across the board.
Absolutely. I think that's what it's all about here, Jill. You know, when you think about the practice of selling a stock or buying a stock, there's a professional trader often on the other side that's trying to get me, the retail investor, to think that I know or I feel that this stock is going to be worth more tomorrow. But if you think about that relationship, I'm inherently on a different side than the professional trader. When you think about private market investments, you have professional asset managers and large funds that are sitting alongside the investors who are making investments together, and they're holding hands, building value together. It's all about financial inclusion. It's all about financial literacy. It's all about trying to create a better investment journey for more people. And I think it's really high time that the retail investor in the US and beyond get to have a piece of that experience and that performance that really the private wealth groups, the institutions, and the ultra wealthy have been so fortunate to have for a long time.
All right, Michael, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.